This is Monty once again from DPL Surveillance Equipment. This morning we're going to highlight some things that I just came across. There's probably three different things to keep in mind here. Okay, two of them. Well, let's just go over each and every one of them and who I am and why I'm doing this particular podcast. I'm owner of DPL Surveillance Equipment. We're a full-service surveillance and security equipment company. We have lifetime guarantees and warranties on all the products. We have 24/7, 365 tech sales and customer support. Largest inventory of items that you can buy or rent. It doesn't matter. You can even lay away these items. So you can make installment payments on them throughout the year if you need to. And by the way, we just redesigned our website. So we have new and improved website. We've done a complete makeover, spent thousands and thousands of dollars. And go and check it out and when you get a chance and let me know what you think. Now, the reason why I'm here today has nothing to do with the website or the business per se, but what it has to do with the way Wall Street is taking advantage of investors. One of the things that came to mind is a number of Wall Street companies, publicly traded companies, have figured out how to round up their earnings. Now, earnings typically means that a company is making a certain amount of money and they have to report this on a quarterly basis. So every quarter, companies come out with their earnings per share numbers. And Wall Street is very sensitive to those numbers. If a company thinks they're going to make 10 cents and they only make 9 cents, investors could dump the stock, for instance, and sell a lot of it, and thus driving down the price. On the other hand, if the companies come out and the earnings are projected to be 10% and they actually are 11% when they actually come out, then that's good news. That means you made a penny over, right? So what happens is investors get enthusiastic about the stock. They get very happy and they buy up, they bid up the shares in Microsoft, Apple, Amazon, whoever it is, and everyone makes money and everyone's happy, right? Well, what's happening nowadays is a lot of companies have decided to round up the numbers, whatever they are, so that it looks better than the projections. In other words, if I think I'm going to make 10%, I'll go ahead and round it up to 11 cents, just to make it very, very simple. And what's happening is now regulators and certain people are looking at this activity, and they've determined that a number of companies across the board are participating in this scheme to make the earnings look a lot better than they were. Now, see, a lot of this falls in line with what I've been saying all along in terms of how Wall Street colludes and manipulates and does everything imaginable to take advantage of investors, especially retail investors. Retail investors typically don't have access to very good knowledge and very good research and very good information as compared to insiders. So what's happening is a lot of retail investors, they get caught up in these fancy schemes that Wall Street is using, and they get taken advantage of. So we'll come back to that later. Another scheme that you want to be aware of has to do with stock buybacks. See, believe it or not, a lot of stocks are relatively cheap because the economy is really not doing good at all, even though people in Washington, particularly Donald Trump, they don't want to admit it, but a lot of shares are very, very cheaply priced because the profits aren't there, the earnings aren't there. That's why they're manipulating the earnings, of course. So the profits aren't there, the earnings aren't there, the consumer demand isn't there, the commercial customers aren't showing up buying, and government agencies aren't ordering as much as they would like to or are used to. So there's a number of different things that are keeping companies from making the types of money that they used to make. So what happens is your stock price reflects all of this lack of activity, lack of demand for your products and services. So your company stocks become cheaper as a result. So what's been happening is companies who do have access to cheap cash or cheap money, free money, basically, when the government, through that quantitative easing fiasco that we've been going through, which means the government's been printing money, making a lot of that money available to corporate America. So GE, AT&T, Microsoft, all these major companies can borrow money, very, very cheap money, at practically nothing at all. So what do they do with the money? Well, we can't get access to that money, but those guys can. So what they do with their money, they buy back their company stock using free money that they get from the government, okay? And so what's happening is they're buying back their own stocks, but they're not telling retail investors that they don't plan on holding on to a lot of that stock. Okay, so what happens is they start buying back the stock and stocks, for instance, and they tell retail investors, "Oh yeah, you guys should go ahead and buy the stock of my company because it's cheap, right? It's affordable. It's a bargain, right?" So, and make sure you understand this, and I want to get this clear in my head also, because I got a few things I want to make a point of, and I don't want to convolute it too much. What happens is they start promoting their stocks, whether it's AT&T, Amazon, Microsoft, Apple, Facebook, Netflix, whoever. They tell you to go ahead and buy my stock. My stock is cheap and affordable. They don't talk about the lack of profit, the lack of demand for the products and services, but you are told to go ahead and buy those stocks because they're cheap. You know, you're getting a very good value for your money. So when the retail investors come in and start buying those stocks, bidding up the prices, the insiders really start selling. When you look at the various disclosures that the SEC demands and gets from these companies, you find that most of these insiders at the companies, the management, and people in the C-suite, for instance, they start selling soon afterwards. So in other words, they have very little to lose. They can use free money to buy their stocks, okay? That's providing a little bit of blip to make the stocks go up a little bit. But when the retail investors come rushing in because they think Microsoft is cheap, they think Facebook is cheap, they think Amazon is cheap, what happens is a lot of times what happens actually is there's a quick run up, again, because the companies can borrow free money from the federal government because the quantitative easing and all this printed money floating around in the economy. The big borrowers don't have a problem getting excess of that capital. So they buy a little bit of stock, stocks goes up, retail investors see that, and they say, "Oh, my God, I better hurry up and buy some of these stocks of these companies because they're going up, but they're still affordable, so I'll go ahead and jump in." Now you have real money coming in from retail investors or basically duped into believing that it's a good time to buy. So the prices go up. Now the insiders who know there's no long-term fix for the problem of having a sluggish economy, an economy that could soon go into a recession, these insiders sell like crazy. They sell a lot of stock. They don't sell everything, but they sell a lot of it to these retail investors. So this is a major scam, and you guys need to be aware of it. And another item that you want to be aware of, too, there was, I think during the Obama administration, there was something called the fiduciary rule. Basically, the fiduciary rule meant that a lot of corporations, publicly traded corporations, a lot of investment houses, J.P. Morgan Chase, Fidelity, Goldman Sachs, Capital One Inc., a lot of these companies that manage investments for you, they actually had an obligation to disclose when there was any possibility of inside wheeling and dealing with some of the financial products that they were selling you. In other words, just like doctors have the Hippocratic Oath, don't do any harm and make sure that the customer is the priority, or the patient in this case with the doctors is a priority, and first do no harm. Well, the same type of rule or moral understanding, they try to do that with Wall Street. They try to make sure that if there was any possibility of conflict of interest, in other words, if J.P. Morgan Chase was selling you a retail product, they should not be able to go out in the market and make money by selling that retail product, or trying to get you to buy something that they didn't really believe in, that they wanted to sell from their inventory at the same time. Basically, what this amounts to is some of these investment houses, they'll want to dump their inventory of a certain stock or asset of some type, but they'll go out to retail investors and tell those retail investors, yeah, go ahead and buy this or that asset or something that we have, without disclosing the fact that they really don't believe there's any long-term reason to hold on to it. And it can be real estate, it could be commodities, it could be stocks, it could be gold, it could be silver. Whenever an investment house, J.P. Morgan Chase, Fidelity, Goldman Sachs, whenever they have an inventory of something, they should firmly represent the customer's best interest. They shouldn't be selling something or dumping something from out the back door, while at the same time telling retail investors to buy something through the front door, coming through the front door. So anyway, there's a lot of conflicts of interest. There's a lot of situations where customers have been taken advantage of. The financial crisis of 2008 had a lot to do with companies dumping some of the various assets, the same assets that they were telling us to buy. And again, it could be real estate, it could be stocks, it could be mortgage, CMOs, CDMOs, whatever it was. A lot of those companies were dumping these things, through the back door, while telling us, retail investors, or telling everybody else, you go ahead and buy this. It's it's a very good investment, very cheap. You'll make a lot of money. That's why a lot of people are broke now and completely financially devastated because of these shenanigans. So you guys know I'm a big proponent of Bitcoin, and this is what we're trying to overcome. We're trying to overcome a situation where regulators, and before I forget, your congressmen and senators, they can do insider trading. They can commit insider trading, or use insider trading information to make money all they want. There's no laws preventing them from going to jail or anything like that. There's no law. There are no laws resulting in them that going to jail for doing insider trading. I can't do insider trading. You can't do insider trading. Taxpayers are paying them for a salary for screwing us. So that's what's happening with them. Anyway, I wanted to throw that in there, that they're doing insider trading in Washington, and no one can do anything about it. No one has the guts to do anything about it. But now that we have cryptos and Bitcoin and Ethereum, Litecoin, and we have developers and we have technology that we can open source coding that we can look at, we can analyze, we can review ourselves. We don't have to trust these idiots in Washington or Wall Street. So just be aware of the fact that we need to step away from traditional financial markets and take a closer look at Bitcoin and blockchain-based technologies, because with the open source coding, the open source nature of those projects, we can see, we can analyze, we can try and hack, try and break into these things, try and prove that they're kosher, that they're secure, that they're safe. We can't do that with the things that are happening on Wall Street. Everything is patented, everything is trademarked, everything is behind closed doors and walled gardens, and we can't see what's really going on. So major difference in the traditional financial markets versus the crypto space. So let's do our homework. Let's stay committed to promoting Bitcoin and the various cryptocurrencies and blockchain-based technologies, because Wall Street has been raping taxpayers and raping investors for far too long, and far too many people are suffering and working until they're 70 years old, 80 years old, and all that, and it's crazy. So Anyway, just wanted to bring these things to your attention. You guys have a great day and take care. Bye.